Hello, guys. I can't. I have no volume.
Oh, we're gonna start in 1 minute. They said so.
Oh, okay. I can hear it now. All right.
We can do.
Are we,
We ready?
I thought he would tell us.
No. 8:30.
We're ready to go. Okay. Good morning, everyone. Thank you for your attendance. We'll go ahead and call to order the May 16th meeting of the Longview Firefighters Relief and Retirement Fund. First item will be make note of members present. We'll go to citizen comment. We have no citizen comment in the audience, citizens in the audience at this time. Under citizen comment, item A, we'll go to presentation of the first quarter pension performance with Charles Smith with Robert Harrell and Associates. Charles, welcome. Thank you for being here.
Thank you, everyone, and good morning. I'd like to start off with our market commentary for the first quarter of 2023. Okay, the first quarter of 2023 was marked by several implosions within the banking sector and an indictment of a former U.S. president. Silicon Valley Bank went under after customers made a digital run on the bank's deposits after their bond portfolio had lost millions throughout the rapid interest rate hike cycle of 2022. Additionally, the KBW NASDAQ Bank Index was down 25% just for the month of March. The S&P 500 gained 7.5% in Q1 of 2023 after gaining 7.5% in Q4 of 2022. The index was down 4.8% in Q3, 16.1% in Q2, and down 4.6% for the first quarter of 2022. As you can tell, we had a rough year, 2022, as everyone did. As of 3/31/2022, the total return of the S&P was negative 7.73% for the trailing 1 year, positive 18.6% for the last 3 years, positive 11.19% per year for the last 5 years. So as you can tell, the S&P has a history of being positive. After finishing 2022 down negative 13%, the worst year for bonds on record, the Bloomberg Barclays US bond aggregate remained positive in Q1 2023, rising 2.96% after growing 1.87% in Q4 of 2022. Inflation was a major factor in 2022, with the Consumer Price Index being the highest calendar year inflation rate since 1981. The first quarter of 2023 saw inflation come in at 1.7%, which brought the trailing inflation rate, the annual rate, down to 5%. And since then, we have had an April number that came in at 0.5, which brings it down to 4.9%, which is right in range around that 5% bogey. The yield on the 10-year Treasury note ended the fourth quarter lower at 3.49%. Actually, it closed yesterday, to give you a little bit of updated information, at 3.5. After being issued at 4.1 and now selling at a premium, investors who believe that the rate hike cycle is nearing its end are stocking up on treasuries while the coupon is relatively high. One thing to add to that, I noticed yesterday that the 1 month bill was 5.58%, which is pretty high considering it's just a 1 month maturity. Okay, real gross domestic product grew by 2.6% in the fourth quarter, 3.2% in Q3, and shrank by 60 basis points in the second quarter of 2022. GDP is a comprehensive measure of U.S. economic activity in the U.S. And since then, we've got a number of 1.1% as of the first quarter of 2023, which is well below the average. Current U.S. unemployment rate remained at 3.5 through December 22. Now it has ticked down a little bit. I believe it's 3.4 as of the last reporting, which was as of April, yes, sir, 3.4%. There are still about 5.8 million unemployed members of the workforce. Okay, again, our clients are fully invested, diversified, and rebalanced diligently. To kind of go over the high points there, the S&P 500 was up 7.5% for the quarter and down 7.73% for the trailing year. The Barclays Ag Bond Index was up 2.96% for the quarter and down 4.78% for the trailing year. International stocks, which is measured by the MSCI EFA, were up 8.62% for the quarter and down 86 basis points for the year. Emerging markets were up 4.02% for the quarter and down 10.3% for the year. The Barclays US TIPS Index, which is Treasury Inflation Protected Securities, was up 3.34% for the quarter and down 6.06% for the year. Oil closed the quarter at 72.81 cents per barrel on the New York Mercantile, down 5.34% from 79.56 at the end of 22. I believe it closed yesterday a little over $71 a barrel. Okay, does anybody have any questions about the commentary?
No, we don't have any questions, Charles. Thank you.
Okay, we will proceed to our first report for the pension. Give me 1 second, guys, so I can share my screen here. Okay. Okay, we can get started here, guys. This is the balance sheet, the balance sheet as of 3/31. As you can see here, we have all of our asset classes starting from large cap, going down capitalization size, all the way down to emerging markets here. If you notice, we do have our Kyle project invested with Rastegar. That shows that there. And as you can see, it's below the 5% target for real estate there. And we will be rebalancing at the end of June. So we will use our REIT there to rebalance that slice of the pie, so to speak. Going down, you have your hedge fund with Millennium, 2.4%. Our alternatives there, which we've had some problems with valuations lately. Actually, we did get some new information. Well, it's new to us. I believe it was Bravo down here, Bread Blackstone, actually, that came in as of 3/31. The other updated information that we received was actually, I believe, as of 12/31. And again, that's new to us because there's a very large lag there with regard to the alternative investments. And as you see here, we have 62% equities. We're getting closer to that 65-35, which is our target. And of course, once we get a lot of these alternatives liquidated like we have planned, it's going to be closer to that 65%. So the total ending balance there is $89,022,884.13. And I do have an update for you. Give me 1 second. I can share that with you. Well, actually, give me 1 second, guys. I believe our update for everyone. Give me a minute. Excuse me. Glad I have this actually right here. Excuse me, guys. Sorry about that. Sorry for the wait there. I just want to make sure that I have the right update for you. And it's going to be as of yesterday. Okay, so as of yesterday, we have 87,382,643.08. And compared to 3/31, I believe we've had quite a few outflows. So the portfolio is, I would say, flat, maybe 50 basis points down or so. Okay. And get back to the report here. Okay, and if you see here that this is our pie, this is just a graphical representation of the previous page, and it just shows that the portfolio is very well diversified. And as you come around, you have your different large to medium to small cap sizes. We have our real estate, our international funds, which are both Vanguard but both active funds. And we round it here with our alternatives and then fixed income, and then coming back up here to cash. Okay, this is a little broader look at things. This is the asset allocation, kind of a 50-foot level there. Domestic equity, excuse me, 43%. Internationals, 9%. Real estate, 5% is, right there at our target. Emerging markets at 5%, fixed income at 31%, alternatives at 5%, and then 2% cash. And then now we are down to our unit value chart, which shows the history of the plan as far back as we could get relatively good data. And as you see here, it's back to 2011. We also have included the CPI there, which of course is our inflation measure. And as you see, back 11 and 12 and 13, how inflation was, excuse me, 3% there, 1.75, 1.5. And if you look, for instance, 2013, you had an annual return of 10.83 with an inflation adjustment of 1.5. So the actual real return there was 9.2%. You keep going down. Let's go back one more. Okay, so we have 2021, 11.18, and then you're starting to see where inflation starting to get a pretty good hold there, 6.91% in 2021, which brought that 11.18 down to a 4.09. And then we had the disastrous year of 2022, as everyone did, down negative 14.76. And then, the inflation rate there, almost 6.5% with a negative 20.54. So if you look here, this is our current period. So we have $89,022,884. We had an outflow of $1,097,000 with a nominal return there of 4.38%. We had the CPI come in for the first quarter at 1.71. And then you have the real return at 2.67. Okay, I mean, like I said, this is by no means an inception return. This is just as far back as we have relative data. And it's 12.25 years, 4.08% on the unit value. That during that 12.25 years, inflation has been 2.61% for a 1.40 real return. And of course, that has improved since we've come on board, and it is continuing to improve. Okay, guys, any questions on that portion of the report? I'm going to go ahead and get into the executive summary now.
Does anybody on the board have any questions right now?
No question.
No, we're good to go forward, Charles.
Okay, now this will give us a little bit of insight on our current managers. The plan itself has a 1-year return of, and this is as of 3/31, negative 6.02%, 3-year return of 8.61%, and a 5-year return of 4.73%. And as you can see, that the 5-year return is ranked right there in the 38th percentile. 3-year at 8.61 is right up the fairway, 46th percentile, and as is the 1-year return, negative 6.02%, right at the 48th percentile, which is right in the middle of the fairway. If you look at our active managers here, as we're ranking them by alpha, we have our large growth fund, 24th, top quartile, of course, doing very well. We were worried about this a couple quarters back, but excuse me, as we know, the good ones always recover, as he did. Vanguard Equity Income, which is our large value slice. It's an actively managed value fund at Vanguard, again, 28. They have always been pretty strong performers. We have ClearBridge, mid-cap growth slice. We are sitting at 14th for the 3-year alpha there, which is pretty good. We were worried about their more current performance, but 67th is not too bad considering what's been going on, especially with that mid-cap space with the banking crisis, et cetera. Diamond Hill, right at 55th with a 1.87 alpha, which is pretty impressive considering that was the fund that had the Silicon Valley Bank exposure. It was a little less than 1%. But what we found was in January and February, they did so well that hit in March whenever they had to write down that loss, actually brought them still right in the middle of the fairway, which we were expecting them to falter. And, we were actually planning on doing a search, which we don't have to do now because they actually have already recovered. Okay, and excuse me, JP Morgan Small Cap Growth. If y'all remember last quarter, they were on our watch list. They have not been doing well, and we're going to keep them on the watch list. We're not going to do anything right now, but I actually ran them through April, and they really haven't gotten any better. So we might come in with a large cap growth, you know, something available, within that cap size and that style range for y'all whenever we come back next time. So we are going to probably be doing a large cap growth search, but as of right now, we're gonna keep them in place because, like I said, usually the guys that are really good at this, whenever they falter a little while, they just need a catalyst, for something to get better for them, and one of their things to come true. So the good ones usually continue to do well. So we're going to keep an eye on him, but do not be surprised if June comes around and we do have a replacement. Okay, small value MFS, 64th on the 3-year with a 66 on the 1-year. Vanguard International Growth, top quartile, 1.02 alpha for the 3-year, which is very good. The International Value Fund, which is 49th, again, right up the fairway with that guy. Those Vanguard funds, they're active. They're known for their index products, but these active funds also do very well. T. Rowe Price Emerging Markets, 93rd on the 3-year. This guy was on the watch list for a while. We took him off. As you can see, that 30th percentile in the 1-year there, they actually came back with a vengeance, and they are looking very well now, actually. BlackRock High Yield Fund, 31st on the 3-year, 24th on the 1-year, still doing well. MetWest, 64th on the 3-year, and 45th on the 1-year. Again, right up the fairway. Now we're going to look at our index products and the funds here that can't get an alpha ranking due to their fit to the benchmark. So the Vanguard's large cap index, 31st, mid cap growth, 28th, iShares mid cap 64th. Okay, so Russell 2000 ETF. Again, we've been looking at this. We looked at it last time, and we noticed that it was, in that range for replacement or to get a good look at it. And what I found was that during the, whenever we buy these index funds, we're buying the whole market. And that being said, a lot of those regional banks that were in that cap size, which is mid cap and small cap. So this Russell 2000 ETF is a small core fund. And I believe it's about 16% financials, which the whole 16% isn't in regional banks. I mean, there's insurance companies and other consumer finance companies, but a big portion of it is financials, and that is what has drug that down. And on the mid cap space, you can still see 64th is still kind of lagging. And with the 77th on the 1-year, that guy also, I believe they were 15% financial. So you're going to see that whenever you buy the entire index, you're also going to buy the ones that fall throughout that banking crisis. Okay, iShares Core US REIT, 14th on the 3-year. Guggenheim Total Return, which is our total return bond manager, that is 33rd with a 69th on the 1-year. The PGIM, 52nd and 64th on the 1-year. And then we have our JP Morgan Global Bond Fund, which is 1, 2, and 9. Always stellar. They do a great job investing in global bonds. And then we have Millennium there, 15.28%. That is a return, and that is second among all hedge funds in the actual peer group of 112. They do very well. And then anything under this is going to have an asterisk because of the lag in reporting. So all of these returns are calculated on just the information that we have. And we've noticed a lot of times they'll have a really large distribution and then not change the market value. So we know that a lot of these 1-year returns are going to be very lumpy. So if you want to get a better idea of how the fund has performed, this 5-year return, is going to be a better reference. Okay, guys, and for our last page here is just the total fund, and this just gives the fund against its total fund benchmark. And as you can see, year to date there, 438 compared to 4.20. So we're 18 basis points ahead of it, and the benchmark has no fees associated with it. So there's another I guess, 70 or 80 basis points, that we outperformed it. And again, that 4.12 was the median for the peer group, and we also outperformed that as well. So if you look at this, we have a pretty good history of outperformance there, especially since we've been here. The 2 year lagged a little bit there, but the 3 year is pretty strong with 8.61 compared to the 8.45 for the median peer group and the 7.64 for the actual total fund benchmark. Okay, guys, that's actually going to conclude the presentation. Do we have any other questions regarding the report?
Hey, Charles, this is Andy. So I do have a question on the JP
Yep.
Morgan small cap. Did you say that y'all are looking to replace that, or you're just doing a?
Well, not currently. It's currently on a watch list. We're going to keep a good eye on it because, JP Morgan has a way of doing that and coming back out of this. And if you remember, it's been on the watch list, I think, only one quarter. I mean, last quarter is whenever we noticed it. So we're prepared to keep it on the watch list for now. But if I look at June and see that it's faltered again, we're going to come with a replacement.
Okay, that's what I missed.
So the answer to the question is we haven't started the search yet, but if we need to do it, we will come with a replacement because like any of the allocations are important, so is small cap growth. So.
Good. I just wanted to make sure I heard that right. I thought you did say that y'all were coming with a replacement in June. So.
Well, no, not yet. We're just going to keep an eye on it because we like to keep them if we can, but if our hands are tied, our hands are tied.
Okay, that's all I got.
All right. Does anybody have any other questions for Charles? All right. Charles, thank you for coming. At this time, you don't have any recommendations for any changes, is that correct?
Correct, yes, sir. There's no recommendations for any changes at all.
All right. All right, well, thank you for coming. And if you'll just you can hang there,
Sure.
or if you need to go, you can go ahead and clock out.
No, I'd like to stay if you don't mind.
Oh, no problem.
All right, guys, thanks.
Thank you,
Okay.
Charles.
Hey, thanks, Charles.
Thank you, Charles. We'll go ahead and continue on items for action, review and motion regarding the first quarter pension performance.
I'm making a motion to receive this presented by,
All right, we have a motion. Do we have a second?
Second.
Have a motion and a second. All members say aye.
Aye.
Any opposed? Motion passes. Item B, review and motion regarding the recommended trades from the first quarter pension performance presentation. I believe this can,
we can strike this because there wasn't any recommended trades.
yep. All right, so we have a
I make a motion, we strike item action B.
motion.
Second.
Have a second. All in favor, say aye.
Aye.
Motion passes. All right, item C, review and motion regarding the reconciliations for the month of April 2023 for the Moody checking account, Moody disbursement, and MSSB Omnibus.
I make a motion to accept all three.
Second.
Have a motion and a second. All in favor of accepting item C, say aye.
Aye.
Motion passes. Item D, review and motion regarding the internal financial statements for March 2023 and April 2023.
I do have a question on this, so for Pam. Charles was saying that all these alternatives are so back, some of them not even done from 12/31 to 22.
That is correct. We're just now getting 12/23 financials for several of the, or 12.
22,
For the
okay.
22 for the alternatives.
All right. I was just curious about
Yeah,
when you
in
brought the
fact, that's
financials.
like the end of April.
Okay.
Yes, sir.
There's nothing we can do for that. It's just kind of,
No, I mean, I think that's something that has been pretty typical over the years with the alternatives that with their.
I just didn't know they were always,
lag.
it's May, I didn't know they were that far behind.
Yeah.
That's my experience with them personally, too. They
Okay.
always lag.
I didn't realize they were that far behind.
Pam, the other question I have on that is, do they notify you when they're gonna be lagging that far, or is it?
There is no notification. That just seems, that's historically what is done.
Okay.
There's two of them that I don't get till April the 30th. So We are just received those.
Okay.
Yep, no, there's no notification, it's just the way it is.
Oh,
Okay.
My bad. Sorry. Okay.
does anybody have any other questions for Pam on that?
I move to approve.
All right, got a motion to approve.
Second.
Vicky seconds. All in favor of approving item D, say aye.
Aye.
No opposed, motion passes. Item E, review and motion regarding the minutes for the April 23rd meeting. April 2023 meeting, my bad.
Motion to approve the April 2023 meeting minutes.
We have a motion, we have a motion to approve. Second by Chief Parker. All in favor of approving item E, say aye.
Aye.
None opposed, motion passes. Item F, review and motion regarding the retirement drop for Jerry L. Goss. Do I have a motion to approve?
I'll make a motion to approve.
Motion to approve by Vicky. Do I have a second?
A second.
Second, Angela seconds. All in favor of approving item F, say aye.
Aye.
Aye. Motion passes. Review and motion regarding the refund of contributions for Macaulay Goodman due to separation.
Motion to approve.
Second.
Have a motion and a second. All in favor, say aye.
Aye.
Aye. Motion passes. Review and motion for refund of contributions for Alex Gonzalez due to separation.
Make a motion we approve.
Motion by Chief Parker to approve.
Second.
Have
Third.
2 seconds. All in favor of approving item F, say aye.
Aye.
Motion passes. Item I, review and motion for refund of contributions for Nicholas B. Moore due to separation.
That was good. I move to approve.
Chief Parker makes a move to approve on item I. Have a second?
Second.
Do have a second? So all in favor?
Aye.
Aye.
All right. Aye. And lastly, review and motion regarding the refund of contributions for Justin D. Cameron due to separation.
Move to approve.
Second.
Moves to approve in a second.
That was a
All
big
in
one.
favor, say aye.
Yeah, he's been here for about 15 years.
Aye.
Got one more.
Yep.
Oh.
We have one more of these left. Review and motion regarding on item K for a refund of contributions for Austin Davis due to separation.
Make a motion we approve.
Chief Parker makes a motion to approve.
Second.
Vicky seconds. All in favor of item K, say aye.
Aye.
Aye. All right. Motion passes. Item L, review and motion regarding the expense reports for the 2023 TexPERS Annual Conference in Austin, April 2nd through the 5th.
This is the one that was tabled from last month.
Yeah,
We
we had
was
some-
jacking with the prices. Pam got it all, sent the email out, so I'm making a motion we approve the
All right.
expense report for Telford, or TexPERS Conference.
All right, we have a motion to approve item L. Do we have a second?
Second.
Second. All in favor of approving item L, say aye.
Aye.
Motion passes. Items for discussion. Item A, discussion of upcoming retirements.
Yours is the only one.
I believe mine is the only one that's currently on the books, and that'll be August the 4th.
There's actually one more, Scott
Oh,
Lake.
Oh,
that is
Scott
right,
Lake,
Scott
that is
Lake.
right.
Yeah, Scott Lake is the end of this
End of this
month,
month.
Yes,
Yes.
sir.
here in just a couple of weeks.
I forgot
So,
about Scott.
And has he already been in contact with you, Pam?
Yes, sir.
Okay.
Okay.
All right, so, then item B, upcoming conferences, we have Telford Peer Review, June 15th and 16th, and in Austin, and then the TexPERS Summer Educational Forum, August 13th through the 15th. I believe Pam has put out an email about, if you put out an email to the board.
That one has not been put out yet, but the other two have.
Okay.
The Telford ones have, and the TexPERS will be coming shortly.
Yep, you gotta talk in the mic, Pam.
They
Oh, I
can't hear you if you don't.
All right. The Telfra ones have been sent out. The Texpers in Woodlands has not, but it will
Okay.
be coming shortly.
Okay.
As soon as I get it from Texpers.
Right.
Okay, thank you.
Yes, sir.
And I would recommend on these, everybody, if you want to go, book early because the hotel block fills up fairly quickly on the Texpers conferences.
Yeah.
And I think Telfer as well, so we need to,
I think
Be
Colby was,
diligent.
Colby was talking about the Telfra, and because it's in Corpus this year, it's gonna fill up pretty quick. And I don't know if they got enough blocks or not, he said.
Which of those offer CE, Pam?
Both of those
Both?
should.
Or- okay.
Yes.
Yep.
all right? And I would just let Pam know any of us that are going to be in attendance, so. And unless anybody has any other comments on that, we'll go to item C under items for discussion. The next regularly scheduled board meeting is June 20th at 8:30. See if there's any conflicts there. Is
I'm good, I'm good. I'm good on the 20th.
I'm good on the 20th too.
That
so
works for me.
Colby will probably be here. Okay.
Yeah.
All right, unless we have any other business, we'll move to adjourn. All in favor of, do I have a motion?
I make a motion we adjourn.
Yeah, second.
All in favor, say aye.
Aye.
Motion passes.
All right, we're adjourned.